and welcome to this presentation. Today we'll be talking on how to trade, how to place a trade using your phone, MetaTrader 4 on your phone. So today we'll be talking on MetaTrader 4 interface part 1. Now, MetaTrader or trading is done in 3 different platforms, so you can use 3 platforms to trade. That is the MetaTrader 4, MetaTrader 5 ODC trade. Some people or these trading firms, they come up with their own software they can use to trade, but those are the general interfaces that you can use: MetaTrader 4, MetaTrader 5, or C trade. Now, MetaTrader 4 and MetaTrader 5 is the same platform, but MetaTrader 5 is an advanced form of MetaTrader 4. Take note, MetaTrader 5 is an advanced form of MetaTrader 4, which therefore means everything will be the same on your MetaTrader 5 and MetaTrader 4, but the exception will be MetaTrader 5 may reject some brokers. That is the first condition. MetaTrader 5 may reject some brokers. And the second condition is MetaTrader 5 actually use, most of them, they use scripts. So installing a customized indicator on MetaTrader 5 is somehow complicated. So MetaTrader 4 takes all the indicator, but if you have an indicator, a customized indicator on MetaTrader 4, you may not be able to install it on MetaTrader 5. But MetaTrader 5 is advanced, which means if there's poor internet connection, then MetaTrader 5 work well. So that is just a difference. Now let's dive into the platform. So this is actually the MetaTrader 4 interface, and on this MetaTrader 4, you see here there are so many things. So let's move. We'll do it step after step. So let's start with the first. If you look at this point here, this is actually the code. This is the code. So you click on this point, you click on code. Then when you click on this code, you actually see these are the currencies. So these are the currencies. And if you look down here, you see this is the spread. This is actually the ask price. This is the bid price. So this is actually what we call the code. This is the currency pair. So if you click down here, if you open your chart, you click here. If you open your interface, you click here, you actually see the code. And on the code, you will check the spread. When you see the spread, then you know whether you need to trade that pair or not. If you don't know what the spread is, then you go back to the previous video on terminology used in Forex, then you get details about spread and how spread affects your trade. Now, if you click on this interface, you have this interface. Now, these currencies or these pairs may not appear here. These pairs may not appear, all the pairs may not appear here. So the first is, how do I add those pairs that does not exist here? This is how you do it. You click here, you click on this dot, you click on that plus, you click on the plus, a folder appears, then you click on the folder and select the pairs you want to add. Now this thing is divided into folders. You have exotic, you have future, you have stock, you have energy, you have metals, you have crypto. Then 2 folders are lacking here. You have the FX minor and have what we call FX major. We can have FX crosses, which is the same as FX minor or FX major. Those 2 folders are lacking because I've added those folders on. I've added all the pairs. So we add all the pairs, most often the folder disappears. But if you remove that pair, the folder appears here and the pair comes back inside the folder. Now, if you get a pair, you say, okay, I want to add this pair, I want to add crypto. Click on crypto. These are the pairs. So if you want to add, you just simply click on them. You click on the pairs, they disappear and they are added. Now when the pairs are added, you just go back, click back, then you scroll down. When you scroll down, you see these are the different pairs that have been added. So these are the pairs. Remember, you can do analysis on a pair. If the pairs are, if you don't see the pair here, then you'll not be able to trade that pair. So you must add those pairs. It's very important. You must add those pairs on your chart. When you add those pairs on your chart, then you can trade those pairs. Now the next thing we need to check is, this is a trading platform, but you know a broker offers trading opportunity. So in the absence of a broker, I download a MetaTrader 4, you'll be able to use just a demo account, a general demo account. You'll not be able to actually trade and use that account. Now, if for you to add for you to add or to add the broker to a MetaTrader 4, this is the procedure. You simply click on these three dots up. That is actually the menu. You click on it. Then you click on manage account. This is manage account. You click on manage account. When you click on manage account, the different account opens. The accounts open. When the accounts open, you click on the plus sign here. This is it. So you click on the plus. When you click on the plus, you have open demo account and have log into an existing account. Now click on log into an existing account. Then you type the broker. Take note, when you create an account with any broker, then when you create an account with any broker, they send your login, they send your password, then they send your saver. They send us three information to your email, and some brokers they send investors password. So they send a login and a password to investor login and password. So when they send those things to your broker, to your email, when they send those information to your email, then you can actually use it now to log into your account. Take for example, you have this account. You just click on, if you want to use maybe Vantage, just click on Vantage. Then this is a login and this is a password. So enter your login here. The login is always numbers. Then enter your password and you click on sign in. That is all. When you click on sign in, your account is, you are logged into your account. The next thing is we click on the next dot. So if you click on this next part actually is the chart. So I click on it, the chart opens, and this chart is made up of candlesticks. If you can see clearly, those are candlesticks. Now, to place a trade, this is actually how you place your trade. You click on this that box up. When I click on the box, it opens, and then when it opens, you look here. This is actually market execution. If you want to place a market execution order, or if you want to place a penny order, click on it. When I click on market execution, the penny order opens. So click on it. These are the penny orders. You can choose the penny order that you want, and this is market execution. We're not going to penny orders today. Or we choose the kind of order you want to place. After that, you select the lot size. This is a lot size. You enter the stop loss on your left and take profit on your right. So this is SL and this is TP. It's not written on it. You make a mistake, this part sell or buy will be deactivated. So enter SL here, I enter TP here. Then you change your lot size to the one you want. Now this is actually the two prices, the ask and the bid prices. So you can get the difference, and the difference between the two constitute the spread. So when you enter all those values, you can place an order now. If you say, okay, I'm buying this currency, this is a demo account, so we can use it anyhow we want. You want to buy the currency, just click on buy. Now you also look at this thing. This is actually the spread. The distance, look at it, keeps changing. The distance between these two, you see this line, I see this line here. So when it's too wide like this, that means the spread is high. When it becomes thinner, then maybe the spread is low. So you can also check that there. Now when you do all these things, you click on buy or you click on sell. So let's take for example, we click on buy. I click on buy, the trade is executed. So the trade is already running now, and it's running with a lot size of 0.01. This is the lot size, and this is the profit I'm making, negative $11. Negative because of spread. Now if we get back to this point, so that is how you place a trade to buy or you sell. We move to the next. This next part here, this is actually where you can change the time frame to the time frame you want. This is where you change the currency. This one, add an indicator or add indicators. So let's get on the first one. When you click on this, you will actually see these are the different time frames. You have these different time frames: M1, 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 1 day, 1 week, 1 month. So you can change any of the time frame you want. Then Or that is the first method. Then the next method is you just click directly on your chart and see the different time frames too. So if you want to change to a 4-hour chart, you just click on that. I see 4 hours. So this is a 4-hour chart, which means each candle here takes 4 hours to be formed. Now the next is you check you change the currency to the currency you want. Actually here we have AUD USD 4 hours chart, so we can change it using this method. Just click here and you select the currency. Remember, if you do not add the currency at this point here, then you will not be able to see the currency there. So the first is you must add the currency. If the currency is not there, they will not be able to see it. So if you don't see it, you go back and add the currency. Then the last part here is actually to add indicator. If you want to add any indicator, you can just click on this and you add that indicator. Maybe you want to add a Shimoku, you want to add stochastic, you want to add moving averages and the rest. You click there and you see the indicator. You see the indicator, they can add any of this indicator. This is a Shimoku, so just click done and the indicator is added. So this is the indicator, I can actually use it. Now let me remove it. I'm not a fan of indicators, so let me just remove these things. It really dirties the chart. So that is it. Then the next part is the running trade down here. So you click on the running trade. Actually this is a trade we just placed. So when you place a trade here, then you can check the trade here. So you place a trade here, it starts and you will see it here running. Running means the trade is in process, so we can actually go as the exchange rate is increasing, that is how the profit is increasing. This is AUD USD, and actually you just place this trade, it was in negative, but look at it now, it's in positive, positive 0.08 dollar, and this is the lot size we used. So this 0.08 dollar, how many pips? We'll get to that. If you don't understand what the pip is, go back to the previous video and you watch. Now, so when you place a trade, it appears here, and if you look up here, you see this is balance. Balance is the money in your account. Equity is the balance plus or minus the winning or losing trades. Take note, equity is balance plus or minus the winning or losing trade, which means we can have a trade as this trade is increasing. So this trade is increasing. Actually, look at this value here, the balance is higher than the equity. As the equity, the equity is higher than the balance. So the balance is already the money in your account, while the equity is the money in your account plus this trade, plus this profit you are making. Then the next is the free margin, which is the amount available for trading. So it's the amount available for trading, meaning if you place a trade, the margin reduces. If you place another trade, it reduces. And there will be a point that you consume everything in your account and you'll not be able to place trade. Now, the next thing down is margin level percentage, which is of high concern to me. Margin level percentage is the percentage of a free margin, meaning when you place a trade and the percentage goes down to a certain level, then you will not be able to place trade and the broker may close that trade for you. Take note, the brokers may close that trade for you. Now, this is actually what I recommend. If your margin level percentage goes to 600, do not change, do not place any trade. If you must place a trade, close the previous trade or close any trade that you are making profit before you place a new trade. This is a simple logic. If your margin level percentage goes to 100, the broker start closing trades you are losing. Imagine you have a $10 account and the first trade you are losing $3, the second trade you are losing $2, and maybe the third trade you are losing $1. If your margin level percentage goes down to 100, the broker will close this first trade with negative $3. So close it with $3 loss. After that, this one may go up a little, it closes it, and the last one, it closes it. But if you control your margin level percentage, then the brokers will never close the trade. Remember, people make profit by trading correctly. Some people don't make profit because they want to overload their account. That is why I always say, and I'll keep saying, if you are a trader and your greed level is too high, then forget about trading. Let me repeat. If you are a trader and your greed level is too high, then forget about trading. It's very, very important. So place a trade that your account can carry. Do not get a child and you want to try to maybe pull a vehicle. It is practically impossible. The same thing happens with you. The same thing happens with your account. If you overload your account, it's like you are struggling, or you get you get maybe a trailer, then the trailer leaves a car and you want to carry it on your head, which is practically impossible. So please take note of this thing. Margin level percentage of 600, that is the ID. I leave it at 600 because you may have an opportunity to counter trade, and if the margin level percentage is maybe 100, you will not be able to counter trade. If you will not be able to counter trade, you will miss so many opportunities, because you can place a trade and the trade is going against you, and you see an opportunity to counter trade, but the margin level percentage is too small, and your account will not be able to contain, or will not be able to carry that position if you open that trade, if you open a new position. And remember what counter trading is. You need to use a higher lot. So that is why I keep it at 600, so that if anything happens, then you have an opportunity to counter trade and make good profit. So that is it. Now the last thing is, how do we close a trade? It's simple. You click on the trade, click and hold, then you take close order. I take close order, it tells you close with profit. So just click on it and the trade closes. When the trade closes, that is the money that has entered your account. So that is how you trade, and that is how you use your MetaTrader 4. Now if you close the trade, it always appears here. Look at this thing. I said this is a demo account, so it should not bother you. This is the profit, these are the trades, this is the time, this is the time that this trade was closed. Then now you look at this thing, this is buy, this is buy, the different lot sizes. So when you close that trade, it always appear here. When the trade appears here, then you can actually use it. You can actually check your trade. You see the profit you have made, or you see the loss you have made. Now this is actually how you use a MetaTrader 4, and I think everybody can understand. Now the last thing is, if you don't have a broker, then I will recommend a broker for you. So I'll leave a description below, or I'll leave a link below, and if you need a broker, or if you think the broker I'm using is good, you can just get it, you do your research, then you click on the link and you register. And also please try to like, then you subscribe, so that when we produce new videos, you'll be able to see them as fast as possible. Also share, so that people benefit from this knowledge. Thank you, and see you in the next video.